Good morning, traders and investors. Welcome to the Cinco de Mayo edition of Benzinga's Pre-Market Prep, brought to you by Options House. I'm Joel Alconin, along with your co-host Dennis Dick, Brent Slava, and Jake LaCure here on the news desk, bringing us the news as it breaks. Brent, how you doing this morning? Good morning, traders and
Doing good,
investors.
doing good.
Welcome to the Cinco de
Hold
Mayo
on.
edition of Benzinga's Pre-Market Prep.
Go ahead. Oh, nice. I'm doing good. We got a great show as always this morning. Special guests at 8:35 will be hosting Tim Melvin. Also a little bit later at 9 a.m. Tom Keene from Keene on the Markets will be joining us. How about that, Joel?
Yep, we got a good show lined up today. S&P's, Dennis, trading down 7.25 points. I guess we got a few different things on to get us this down market.
Well, there's nothing good happening. Obviously, there's Ukraine concerns here over the weekend. But for those who went home early Friday night, was not one of them. And J.P. Morgan coming out after the bell there. Brent, do you have the little news that came out from J.P. Morgan? I believe there was a filing.
Yep,
they're expecting
10Q.
Q2 sales.
Yeah, this was in their 10Q filing, so a little bit of digging there. We did have the stock moving. J.P. Morgan in the 10Q saying that it is expecting Q2 sales in its markets unit to be down 20% year over year. Also, elsewhere in that 10Q, they noted exposure to Russia was just under $5 billion, about $4.7 billion as of March 31st. Definitely that Q2 sales in markets unit down 20% year over year comment that got the stock after hours, though.
And they started spanking it after hours, Joel. They quickly knocked off about 70, 80 cents from the price of J.P. Morgan there Friday night. I think they're coming in this morning. Everybody who wasn't knocking it down Friday night seeing that headline and obviously knocking the stock down here today because now it's down $1.50 and it's spanking in the other financials there too. But this is a big down move here for J.P. Morgan, right back to critical support.
A couple things here. Number one is what a strange time to release that news, huh? Friday after the close.
Trying to sneak it out, sneak it in there, Joel.
Yeah. That's number one. Number two. This is the second round of bad news that we've had coming out of the banking sector. Bank America suspending their capital plan in 2014. That's already been putting pressure on the entire sector. Now you get this news coming out on J.P. Morgan. You break down, just looking at first of all, let's take a look at the daily chart in J.P. Morgan. And you had the breakdown after earnings, and then just look at this wicked consolidation here.
Yep.
Several days of just trading when actually the last four trading sessions nearly identical ranges, and now the news comes out, takes J.P. Morgan down. Pre-market low, 53.81 here, getting a little bit of a bounce off that level. Looking on the daily charts, we got to alert our traders to a very important level here. Below 54, you did have some lows in the 53s. You had a low at 53.70 on November 14th. That coincides with the pre-market low. Let's see if that gives some support to it early in the session.
Got thunderstorms there in Southfield. A little bit of static.
Yeah, a little bit of static there. But now we're getting a bounce. We'll take a look at the 53.70 level. As I said, that was low on November 14th. But the news hit it, broke it down. We'll see if it can recover.
And Doug Cass was on our show, obviously, Thursday morning, and he was talking about the Momos being the first stocks. And the financials, honestly, had been taking a pretty good whipping here in the last month or two. So you're starting to see, he was saying, the bow shot off the first, that's the first thing to go is the Momos. And now you're seeing the financials go, and you're starting to see a lot of other stocks. So despite the market sitting up here only about 30 points, only about 1.5% off of the all-time highs, there are some sectors in some serious trouble. And I think this is not good news for the entire financial sector. Obviously, if we look at the chart of Bank America, it has not been able to recover from that announcement just 4 days ago. Goldman Sachs is trying, but it really can't get over the 161, 162 area. Morgan Stanley is kind of in the middle of the range here. And Citigroup is just kind of hanging on a clip. And actually, let's go to the Citigroup chart a little bit more detailed here, Joel, because we're down 50 cents this morning on this J.P. Morgan news.
Okay, we're getting Citigroup moving lower as well. Let's take a look at the chart on Citigroup here. been a little bit quiet here. Same kind of range bound chart as you had at Citigroup. You JP Morgan, similar here. Getting a breakdown in the pre-market here. We made a low at 47.20. Just kind of hanging there. We did have a gap up from the 40 back on earnings here, but you have another low at 46.98 on April 14th. So we'll keep an eye on that level. Just 20 cents away from here.
Just wicked consolidation for the last 2.5 weeks. So the stock has not been able to get above 48.5. And now with the breakdown here today, I got to think on any rally, sellers are probably going to come in. So if you get in this sector here, if you're looking to pick bottoms in this sector, I just don't know I don't think I would be a bottom picker in this sector. I'll put it that way there, Joel.
No.
Financials, not looking good.
Okay, yeah. It just going to this Goldman Sachs, and we've been talked about this. They had the good earnings report. They got the pop off that, and was really hoping to get some follow through actually that high on earnings day was up in the 161 area. Never got the follow through that, and now you're back trading at the levels it was pre-earnings. So really, that earnings didn't give it the kind of bounce that you wanted. So have to keep the financials going to be the leader today.
Yeah, they're going to be the leader, maybe to the
Leader
downside
to the
here. So keep an
downside.
eye.
Yeah,
Set.
we kind of skipped over the SPOOs real quick, Dennis, because we got into
Yep.
that 10Q news Morgan on JP Morgan. But the S&Ps are trading at a really critical level here. Tight range on Friday, got the pop, not the pop that you really wanted to, a big rip to sell, but you did get a pop off that number. And now the S&Ps are trading that. Remember we were talking about that 1865 level? Well,
Yeah.
we're right back there. We hit 65 and a quarter in the pre-market. Those were your lows from the end of, actually on Wednesday and Thursday. A couple big levels there. It takes out 1865. We got to 65 and a quarter. You're looking all the way down. No major support until you get under 1850 to 1844.
I kept giving that scenario where I was hoping on the jobs number on Friday that would have pound us up there and maybe test us to 1900 so that we could sell it. I've been looking at a scenario where I've been wanting to sell a rip. I wanted a breakout where you get all the shorts that finally throw in the towel there and all the longs start coming in looking for the breakout as we, try to break out through 1900. And I wanted to fade that breakout. I started fading a little bit there, but it didn't get the rip that I really wanted. So I'm still sitting here, and I'm still thinking that there's still a lot of shorts in here. We didn't really shake them out enough. But that being said, there's a lot of headline risk here right now, and I think you got this overall market very nervous. So maybe you shook out a few shorts there on Friday, and I think you've got the investors nervous here as well with Ukraine uncertainty over there. Financial sector not looking well. The Momos obviously have been weak here for the last month and a half. A lot of weakness across the board. And even if you look at gold here,
There you
Joel,
go.
it's popping up
Yep.
again here this morning. It had a little bit of life there on Friday. So all of a sudden, risk is back in the equation and people are seeking a little more safety.
Brent was talking about the gold market on Friday, and he said, when is the last time you saw an intraday move like that in gold where it just, straight up $15? This was actually before noon. There really wasn't any news out, and it was very uncharacteristic. I mean, sometimes you see those kind of moves overnight, but to see a big move like that intraday, I think that might have been coinciding with the New York subway going offline, so a little bit of nervousness there. But the move has continued in gold here, and now we got to take a look at the major resistance we have in the issue way up here at 1328.40 and 1331.40. Those were the highs on April 14th and 15th. That's another $15 away from here, so you need one heck of a rally to get up there. But just like you said, Dennis, a little bit of unrest in the markets, a little nervousness overseas, and you're getting a pop in gold.
Yeah, and a lot of the individual gold miners here obviously popping up as well. And some of them, look at Agnico Eagle Mines. I believe they had earnings last week, so I think a little bit of the pop was to do with that. But the stock has actually had a really nice run here for about 7 or 8 days, ever since bottoming down there, AEM down there at 26.5. We are now up at 32.80 here in the pre-market. So this has been an incredible run here for AEM after being in the doghouse just a week and a half ago.
Yeah, it had a nice run up on Friday. Closed near the highs of the day. You had a 32.36 high, 32.31 close, and now you get gold trading up here in the pre-market, so you're getting a little bit more of the boost in that stock. Taking a look at the pre-market trading here, just a spotty trade at 32.80, but you really got to keep an eye above this $33 level, Dennis. Had a high at 33.19 on March 21st. So let's keep an eye on that. That's only 40 cents away from here. That'd be a big resistance level, at least on the first time up.
Actually, I don't think they did have earnings. I don't know why that was popping there on Friday.
Yeah,
Brent, do you know
they had.
when AEM does report?
Yeah, they did
Or,
have earnings on.
oh, they was. Okay.
Yeah, I think it was on the first.
Okay, so they have already reported. Okay, so that was something to do with that, and they are actually this morning. I'm just looking. Morgan Stanley is reiterating an overweight on this stock, and I believe they are raising their price target here as well on AEM. Just go grab that price target for you quick, unless you got it in front of you, Brent. $37.
Okay, all right.
So they like that, and we're looking here just a couple other gold stocks quickly because we haven't talked about them for a while. You had a huge consolidation in Gold Corp as well, which is symbol double G. It's been kind of just stuck here, trying to break out over $25 really. Finally did it there on Friday, closed up through to 25.27, getting some follow through here this morning. It is bid up at 25.55, obviously with gold trading up another $8.
Okay, yeah, nice breakout. If you're playing the breakout, hits 25 several times. Now getting that move above 25. 25.29 is what you've hit no, pre-market. You've traded up to 25.60. Big level for GG 25.48 and 28.87. Those are the highs on April 9th and April 10th. So split that whole area, call it 25.65. That's what we trade in the pre-market. Also, Dennis, one thing about gold stocks too is a lot of times when there's a move, a big overnight move, you either will get immediate follow through off the open and the trend will continue, or a lot of times it's you can get a sharp reversal off the big level. With gold just hanging up here, up $10 and no major resistance, it could be one of those days where you can get in on a gap open near the lows of the days and participate in a nice rally.
Yeah, sometimes, obviously there's an institution or there's a couple institutions maybe hold down the opening print. Sometimes they'll give you a shot there to buy it a little bit cheaper. Obviously, you just look at each other and if, you got most of the golds trading up here $10 at 9:30 and you can buy some gold stocks flat. Sometimes if there's no news on them, other things being equal, obviously, that's can sometimes be a quick little good trade there for you. Let's just move on here. We have one big earnings report here this morning. We've had a few, but only one major one, and it is Pfizer. And the stock is trading down here slightly. And man, we've been talking about the theme last week was pops to fade. I'm going to stick with that theme this week here as well. We did get a little pop in the pre-market on the Pfizer earnings, but it is actually trading down here now. They beat on the bottom line, 57 versus 56, but the top line, kind of a mess, 11.4 billion versus analyst estimates of 12.1 billion. So that's a tidy miss there, and the stock is actually starting to give it back. And man, if you were selling it last week into all those rumors about AstraZeneca, you're happy. I was glad I lightened up my Pfizer position too. I sold some from my investment account up at 32. I kind of wish I would have sold the whole thing.
Yeah, you had the gap up from that news that they were going to take over. And I mean, a lot of times you think the acquiring stock is supposed to go down. Now, obviously, that hasn't been the case here, over the last few months, the last few years. Pfizer did get the nice pop, and it gave all that back here, and it's come down to fill the gap. You had a low on Friday in the issue, and we're trading below that level. You had a low at 30.55 was the low on Friday. That filled the gap from the run up on the supposed takeover. The low in the pre-market here is 30.37, so we'll keep an eye on that level. I don't know, Dennis, what do you think? $30 here. I see a low that Pfizer had at 30.20, but boy, that's not far away from here. Probably maybe got some institutions kicking around at the $30 level. We haven't been
So
there in a while.
It's a huge number for the stock, obviously, and that would be where I'd be looking maybe if I was trading it today. But I think this is still going to be the whole theme here, pops to fade. I think this is a sector that's starting to break now, too. Just quickly looking at Eli Lilly, look at the chart on this, and we've had massive consolidation here forever on Eli Lilly. For 2 months, this thing has really been trying to get through 60. It's been trying, it's been trying. It did get up there and broke out just up to 61.15, but I'm looking at it, and it almost looks like a head and shoulders thing happening here now, too. That
Wow.
stock chart starting to look weak. And Merck here had a big reversal day yesterday, too, or on Friday. After breaking out, it was kind of a failed breakout, and the stock closed weak there. So, but going back to that Lilly chart, what do you think of that?
Oh man, I love charts like this when you get some consolidation, tight ranges, lows in the same area, 49.37 through 49.50 were your last three lows. You've taken that out. That area will now act as resistance if we come back up to it. So use that as a decent level, and who knows with Lilly here. We are I was actually looking at the wrong chart there. Where were the last three lows in Lilly? Last three lows in Lilly were 58.66 to 58.79. Not a lot of trading going on in the pre-market, so if those lows hold, could be looking at the lower 59s.
Brent, do you have news on Target here this morning? Because
Yes.
it really got killed earlier, and what's happening with it
Big
now?
news. Target's chairman will be stepping down.
Ooh,
And actually, this chart was looking okay. Friday it started to break out, trying to get up through major resistance, which was just above 62 at around 62 and a half, and we did sneak above there up to 62, 64. But again, closed kind of weak here. And now, obviously, with this news, they really smacked the stock. They smacked this all the way down to what is that, Joel? $60?
yeah, they did. They took it.
Holy cow!
Yeah, yep. Not good news for Target here this morning. Pre-market trading, you did a good breakdown here. Under 60.20, under 60, got to 59.98. Getting a small bounce here. And so look at that. 60 was a level in the pre-market. If it gets back down there again, should provide a little bit of support to Target.
So now we've been looking through all these sectors. We looked through, obviously, the Momos were the first to go there about a month ago. Financials have been weak, and that sector looks like it's in the doghouse. Financials are the pharmaceuticals. Pfizer, obviously, the biotech's been in the doghouse forever, but now the big pharma starting to get in the doghouse too. And then even looking at other defensive sectors, this is interesting. You're starting to see some of the defensive sectors because if you go to a chart like, for instance, the Southern Company, SO, which did report there last week as well, that's starting to break down. And then I started looking at some of the other utilities, Duke Energy, DT Energy, and you're starting to
Wow.
see those break down here too. So, Joel, this selling is a little bit, it's funny that the market is still up here and we're still only 1.5% off the highs, but a lot of individual sectors are starting to break down.
That is a big move for a utility.
Huge.
Yeah, that's huge. That's like I mean, just looking at the chart here, I mean, you haven't had that kind of trading action since mid-November, late November. You had a breakdown in it, hit 46.79 and 46.81. I believe that was right when the good earnings. Now you broke down to 44.05. You did have some lows in the $44 area. Going back to the beginning of April here, I see a low at 43.92 and a couple others a little bit higher than that. But call 44 the support there, traded down 30 cents in the
It's through it
pre.
right now.
Yeah, yeah. But there might be some bids there, just latent bids, from Friday sitting there. So maybe this is one where we'll open a little bit too high and might be a good short off the open.
Yeah, you do have UBS though downgrading the stock here this morning. They're downgrading it to sell, and that's
Ooh,
why we're down another 40 cents here on Southern. So the 44, I'd agree with you, should have lent some support, but I don't know. We're trading through that right now, and with the downgrade to sell, that's going to scare a few people here too. And man, this was a slow, steady climb up from the whole 41,
look
42
at that.
area for the last month and a half, and look like this. In just 3, 4 days, we give back over 50% of that move. We know what goes up slowly sometimes comes down quickly, and this is the case in Southern. And I'm wondering if some of these other utilities aren't going to have some follow-through weakness here today. Like Duke Energy had a terrible day on Friday, DUK, and it's trading down just slightly here in the pre-market, very light volume, only 700 shares. And also DT Energy, DTE was breaking down a little bit too after having 3 days of consolidation and three lows in the same area, that's whole 7740 area. We did take that out on Friday, and it's looking weak here too. No trades in the pre-market. Somebody trying to sneak out of 100 shares down 10 cents is 76.90.
What do you think? A little interest rate worries here with that
I think
strong,
so.
yeah, with
Yep.
that strong unemployment number on Friday. Earlier in the week, the Fed, continuing with the current pace of taping with that kind of drop in the unemployment rate, perhaps looking for an increase in tapering at the next Fed meeting.
Yeah, it's possible. I mean, and they were hitting a little bit of the other stuff there too. What is the TLT doing? We haven't looked at that for a while. Well, it actually has been holding up pretty good. So, looking at that, then maybe there isn't that many interest rate
Yeah,
worries, but definitely worries in this utility sector.
it looks like it broke out above 112. That had been a big resistance level for it. Broke out on Friday above there. Still holding up here at 112.83. So if you're using TLT as an indication, then no worries on the interest rate front.
I'm still going with this whole theme pops to fade and everything. So I'm looking at the utilities. If we get a pop there, I'm looking to fade it. Any type of financials. Strength, I'm looking to fade. I'm going to stick with that theme. It seems like for the last 3, 4 years, really, it's always been buy the dips, buy the dips. And I'm wondering if we're starting to turn here to pops to fade. And I'm going to keep reiterating this to you guys because I think in the short term, we are still in a little bit of weakness here. And I think as we show strength, that this market, with all the uncertainty out there and everybody sitting on so many gains from the big bull run that we've had since the lows we set 5 years ago, that this market is a little bit nervous. And I think grandma and grandpa's nervous, and I think you've got institutions nervous. I think you got nervousness across the board here. And I'm not calling the top here yet. I still would love to see that late punch where we try to kick 1900 and shake out all those shorts. And that would be the time. But I'm definitely not buying here. I'm just looking for more pops to fade.
Okay, all right. Anything else that we got on the earnings
Ye-
front?
Yeah, well, not really on the earnings front, but we got JH3 asking a few questions
Okay.
here in the chat, and he's talking about my Wells Fargo there. I remember I had the trade there on Friday, and I was leaning on the whole $50 area in the pre-market, and it got the pop. It was again the theme pops to fade. I did get my Wells Fargo covered. I had shorted it on the unemployment number up at 49.90 and 49.93. I did get covered around 49.74 and 49.72. So I had a little day trade on there, and that worked out okay. But then during the regular session, it did pop up, and it did take out, like JH3, it did take out that $50 seller who has been there, and we've been talking about him forever. Did take him out. It took a little bit longer, like JH3 I didn't actually see it, but he's saying it took about a minute to take it out. A couple of large whacks took it out. What happens though is a lot of times what we say is it takes out the size, will sometimes sneak over it by a few cents and then come back through it. It didn't even do it in this case. It took it out and then immediately tanked. And what happens is when it takes it out, it does a number of things. I always talk about this whole tractor being played. When it gets close enough, it draws it up to it, takes it out, and how fast it takes it out will often dictate the course of the next move. If it takes it out in one mighty blow, sometimes you'll catch people who were short off of that level leaning ahead of the 50, and then those guys will scramble to cover, driving the price higher. But if it takes more than a second or two, because we're in this high frequency trading world, if it's not taken out in milliseconds, even if it's taken out in a second or two, that's an eternity, and that's a long time. And that means that everybody that was short the stock has a chance to cover, and people and other high frequency traders might even actually try to buy the breakout and go long. And I always try to short, or I always want to be against where everybody, the herd is, the short term herd. And if the short term herd is covering and getting long, I want to get short. And exactly that is what happened. Stock got up there to 50 and then immediately kind of cratered down and then lost. And obviously the overall market didn't help it either, but it didn't stay up there long, Joel.
So did you weren't able to play it when it went back up there at in the 10:15, 10:30 bracket?
No, actually, I didn't play it on that trade. So I just had the initial trade in the pre-market, and then I covered on pretty much the opening print, 49.74, and then I let it go. And I did see that it did take it out, but I did not trade it.
Yeah, now there's a point where, if you didn't even really get a chance to realize you're wrong if you bought those 50s because it ticked 01. And then a lot of times some of the high frequency traders that plan on going into that large offer will spray offers above it just to get out. They're just looking for a penny, penny, 2 pennies, 3 pennies, 4 or 5 pennies. So they were following that up order with some sell orders at 01. didn't get it, took it right back down, closed fairly weak too, and then you get that
Mhm.
J.P. Morgan news. You're taking it through the three lows you had at 49.37 to 49.50, so that area will now act as resistance. Minor support at 49.13, and that was your low on Thursday.
Didn't Dougie Cass say he was short this one too? I thought he said he was short Bank of America, J.P. Morgan, and did he say Wells as
He
well? Do you
did say
remember?
Wells Fargo. Yep, Doug did say he was short Wells Fargo, and going into one of the stocks that he was long. I know we had to pull his teeth to get one of the issues he liked, but Bonton stores, Dennis, and you're participating with Mr. Cass on this one.
Yeah, actually, Dougie said he was long. I was looking at the chart. I was like, well, there's been some pretty decent consolidation here for a while here, and so I did buy it there on Thursday during the day. So he said a Thursday morning. I bought it Thursday just after the open, maybe around 10 o'clock or half an hour later. It was just hanging out at 11, and I was like, well, you know what? I'm going to put this on for a swing trade here because Dougie likes it, and also I thought, well, maybe he mentions it somewhere else, and he starts mentioning it. Maybe he gets a little prop from just Dougie Cass mentioning it. But I was leaning on the whole 1090. There was kind of a double bottom there, and I was looking at that, and I was actually itchy. It went all the way down to 1090, and I was like, I bought at 11. I was like, well, I'm going to get it down to about 1080, 1075, and then obviously on Friday just turned around and started running here. I sold part of my position up here at 1169. I almost got the high,
Oh
Joe. Look
yeah,
at
very
that.
good, very
Yeah, I
good.
sold I sold half at 1169 because it was a pretty good pop, and I had it on for a swing trade, not for a day trade. But a quick 5-6% pop in that thing, and I'm looking 12. Like that's where I'd really like to get out because that's where the major resistance is there. So it'd be nice though to make 50 cents, or well, I made 60 cents. It'd be nice to make a buck on this.
Yeah, and the swing trade there, and the support well defined here at $11 area. It's funny it did take out the good support at 11, made a couple lows at 10.90, and then but never closed under 11. Looking for follow through that 11.70 high. I don't know how this thing trades with the market, but you do have the market working against you a little bit. So are you going to hold on for your stop, or if there's a little weakness, you think you might get rid of the rest of it today?
Well, I've sold half of it, so we'll see. Like a lot of times, what I do when I'm in a trade like this, if all of a sudden it starts to show weakness and starts to give it back, and if you look at the intraday chart there, we had a pretty good run. We went from 11 to 1150 basically in the first 20 minutes of trade on Friday. Then we consolidated for a bit. And then we broke out. We tried to get up, and we couldn't. 1169. I was just lightening up. I just happened to get lucky, basically, that it started bidding up there. And this is thin too, so I'm
It
actually always
is.
looking at the bids
Yeah.
and the offer. Sometimes this is a 7, 8, 10 cent spread. So I
Really?
don't want to pay 10. Yeah, it does actually for an $11 stock. Is like, man, it's 10 cent spread there. But somebody went up there and started bidding at 1168, 1169. I was like, you know what? I'm going to take advantage and sell a little bit of stock there just to lighten it up. And I'm looking at this thing started breaking down through 1140 and start going through 1150. Maybe I'd lighten up a little bit more, but I'm going to try to let it run a bit here. I mean, it actually looks pretty decent on so many charts that look horrible out there right now. This is one that actually does look pretty decent, especially with obviously the nice candle, the up candle there on
Yeah.
Friday.
Nice big candle there. You're right. Okay. All right. Moving on. What else do we got?
Well, let's go to the pot sector for a second. Kramer on Friday night, GWPH. He did a whole segment on it. He was pumping GW Pharma. He's a little late to the party. We've been talking about GW Pharma forever, but Kramer pumping it always gives the stock a lift, and that's why it's trading up 4% here in the pre-market. It's up $3. It was trading up after hours, and Kramer is featuring it, and that's getting the Kramer pop.
Is this the same Kramer that's not talking about pot stocks?
Yeah, apparently he is.
Oh, okay. Well, this stock is never really gave you much of a pullback off the. It was Morgan Stanley that got things going with the upgrade, 103 price target. I don't think they thought it would get there quite as quickly as it has, but they do have other drugs in the pipeline that are good for, I think it's multiple sclerosis. So, I mean, there are other, it has other things than, just the marijuana. You had the high from last week at 78.08. You had a high on Friday at 76.20. A little bit of a weak close here, but getting a pop up. Pre-market, you just hit 75.50. So I keep an eye on the pre-market high, 75.50, and then you have that other level from Friday's high at 76.20. And I was looking at this thing. I believe it was when it got down near the $62 level, it kind of looked like it was going to give out. Had a low at 61.60 and 61.48, but then the next day it held 62 and made a nice run up. So I don't know. I guess if you're long this thing, just keep moving your stop up and let the market take you out on the downside because very strong move here in GWPH.
Yeah, Alan always talks about this, saying this stock's best in breed here, and it really has been for the last little while. I mean, ever since who was the first? It was Morgan Stanley that upgraded, and then somebody else upgraded it and gave it a price target up there too, didn't they? Brent, you there?
I can't.
Trying
Who was it? I know. I
Let me
know.
check.
Morgan Stanley was the first one, and who was the second one?
Well, the first one actually was Bank
That was Bank America.
Yeah,
They
this is
upgraded
where.
when it was at the top. They
Yeah,
were dead
Bank
wrong.
America bought here.
Yeah.
Morgan Stanley bought here. So, or actually,
Yeah,
it
Morgan
needs to-
Stanley did much better than Bank of America. I thought there was another one in there, but maybe I was mistaken on there. So, but nice triple bottom there. I was talking about this thing, buying this thing at 60 on the pullback, and it didn't get there. And then 3 days, it gave me 3 shots at 61 or 62. I was hardly paying attention to it, and I should have been looking more and just stepped up and bought it at 62, and I would have been happy because the stock obviously pops since then. So this is not one of those pops to fade. We talk about this theme pops to fade, but I like the strength in this stock. Kramer's featuring it all of a sudden here. I'm not saying this is a pop to buy, but this isn't one that I'm coming in and fading here this morning. I'm looking at other sectors to fade and possibly not this one. Here's interesting. Brent, we had so much coverage on King Digital here this morning. Can you break down some of this? Because I guess all the analysts can come out and throw out their coverage now. And the Candy Crush maker is popping 50 cents here this morning.
Today is the day, so we have, looks like 9 buy equivalent ratings from, let's go, Barclays, Cowen, Stifel, JP Morgan, Credit Suisse, Deutsche Bank, RBC, BMO. They all have buy or their equivalent rating. The only firm that's waiting on the sideline that I see is Piper Jaffray. They have a neutral price target. And just to give you a little range of the price targets here, it looks like we have a street high at 31 bucks. That's from Cowen. We have a street low at 22 bucks. That's from Stifel, and they still have a buy on that one. So quite the range there in price targets.
So everybody's bullish.
That's the way it looks.
Every single analyst.
Uh-oh. What level are you at, Dennis?
I'm at level 86. I've been stuck at level 86 here for the last 3 days, and it's starting to really ruin my life because I keep sitting here and I get close and I get close. And I've used up my hammer. And I refuse to pay money because I'm one of those cheap guys. I would never buy another move for 99 cents or whatever the hell they try to charge you. And I like the way they put it there, too. They're so, mean about it. Like they used to say, and now they say, do you want to give up? Or if you don't want to give up, pay 99 cents and we'll give you another 5 moves or something like that. I'm like, no way in the world am I giving them any money. So, but obviously some people do because the stock is obviously got some huge price targets on it here, and it's got a crazy valuation. So I don't understand the valuation. I'm impressed by the video game, but this is still, they got some other games, but it's kind of still like a one-trick pony, isn't it?
Yeah, if people in the chat room there, if you can let us know what level you're on there in the Candy Crush game, maybe give Dennis a little bit of incentive. Also, if you're listening but not signed into the chat room, please sign in, throw your questions our way. We'll do our best to get them answered for you. I just wanted I looked at that a little bit of Barron's over the weekend, and they're still picking on Twitter, Dennis.
Are they?
Yeah.
Can't get out of the doghouse.
Yeah, they're I like the way they phrase their articles. Well, we talked about it here and we talked about it here. We were wrong, but when it got here, we started talking about it going down, and it has. This stock just under pressure. Got a little bit of pop last week. Fiery got a little bullish in it, and I wonder if he's still hanging on to that bullish train here. But I just want to alert our traders that are active in Twitter here. A little negative news in Barron's regarding saying it's still too pricey, not growing fast enough. Looking at it from last week, you had a low on the earnings day at 37.24. still a buck away from that, but that's the all-time low. I know it did trade lower in the pre-market. I believe it traded in the lower 36s or the mid 36s on that day. So if you're looking for a target on the short side here, keep an eye on Friday's low the low from last week at 37.24. We're going to take a quick break here, and we're going to bring on Tim Melvin of the Deep Value Investment Letter. We'll be right back. Welcome back, traders and investors. We have Tim Melvin here of the Deep Value Investment Ladder, and he found some value in the Kentucky Derby. Tim, how did you do?
Well, last year I was very disappointed because I did not cash a single ticket on Derby Day, and that broke a 5-year streak
Ooh.
of continually cashing tickets. But this year we got back on the board.
So you went with the chalk then, huh? You went with California Chrome. I sure hope you had
No,
that. Did you go?
no,
What
no.
you?
I had California Chrome and a couple of exactas, but
Ah,
I won my money on Commanding Curve.
did you have command? Do you had that $354 exacta?
No, I did not. I did not. But I did
Okay.
have the horse with a large percentage bet to show.
Oh,
The horse went
really?
off at 30-1.
Okay.
So I ended up making for the day about 20% on all my bets just from that show bet.
Okay.
You know,
Wow.
there was no
Yeah.
doubt Commanding Curve was going to win the race, guys.
You mean California Chrome?
California Crown,
Yeah.
yes, was
Yeah.
going to win the race. Much faster than everybody else in the field, just a better horse. But you were getting 2-1. Now,
I
you
know.
weren't getting paid to put the money up.
And there's
But
Tim Melvin looking for value.
All risk return,
Yeah,
even
risk.
in horse racing, it's all about risk return, right,
It,
Timmy?
it's all about risk return. And, we had the bet spread in such a way that if any of the best horses won, I was going to have a really good day. But I walked away with a profit from, a pretty smart bet I thought on Commanding Curve. Plus, being a baseball fan, how do you not bet on Commanding Curve?
I had my money on Sam Rat. He fouled Chrome out of there, but just didn't have the gas. I tell you, I haven't seen a horse whoop the field in a Kentucky Derby like that in a long time. And I don't know if you noticed, but the jockey only hit him like once or twice coming down the stretch, and then Espinoza actually looked behind him. He looked going
Yeah.
into the wire. That is a rare. So could have a Triple Crown winner. Well, you found some value in the Derby. Are there any values left out there in the stock market, Tim?
There's some, and I'm going to talk about some stocks today that look a lot like my Kentucky Derby bet. Okay, they're long shots coming out of the gate. If I'm wrong here, I'm going to lose a little. If I'm right, I'm going to make an enormous amount of money. Okay, so let's jump into where's the worst place in the world right now besides Russia or China to even think about putting money in, and it's been the worst for a couple years now.
Greece?
Greece, Greece, absolutely. Well, guess what? Last week, Eurobank, one of the big four banks in Greece, recapitalized. Okay, they did a huge stock offering, really kind of hammered any existing investors in the thing. The government walks away with a large stake in the bank in this deal. But look closely at who else recapitalized the bank. It's Wilbur Ross and Prem Watsa of Fairfax. Their last deal was Bank of Ireland in 2009. They're sitting on a profit of 5x their cash right now, and they still own about 40% of the bank. This deal looks exactly like that. And it also looks a lot like Spain, by the way, in 2012, where if you got your money into Spain just buying Santander, when their economy and banks were just such a mess in 2012.
What's the symbol on that one there, just for our listeners?
Oh, we're going deep here. It's ERFEY.
ERFEY.
Yeah. So, and I'm going to double check that while we're on here because I might have one of the digits wrong. But it's trading at around 30 cents. That's a little tiny bit of a premium to where Watsa and Ross got their money in. But they're not looking to make 10% here, guys. They're looking for 5 and 10 times their money. And when we look at Greece, it looks bad. I mean, unemployment's still 27%. Housing's still going down. But I'm sorry, it's EGFEY, guys.
EGFEY. I know we're looking here. EGFEY. Okay.
Yeah, and caveat, it trades thin. All right, so use limit orders. If you don't get it today, you'll probably get it tomorrow. All right, just be a careful, cautious buyer on these things. But Wilbur Ross, I've been investing in Wilbur Ross deals for the last 15 years. I have never lost money. I have vomited a few times from the volatility, but I have never, on balance, lost money. The guy is one of the best distressed asset players on the planet. If I can get my money in within 10, 20, even 30% of where he did, looking out 5 years, I'm pretty confident I'm looking at a situation that's going to be pretty volatile. There's going to be some interesting twists and turns, but I'm looking for 5 to 10 times my money back on this deal over a few years.
What else are you looking? Is there anything? Because these penny stocks here and these ADR scare the
They're
hell
tough.
out of me.
They're
Whenever I see ADR, I always kind of just step away from it as a trader. But do you got anything else that's looking at value there too, there, Tim?
Well, yeah, we added this week, and this is a little more thin, not as thinly traded here. Global Ship Leasing, GSL.
Okay.
They disappointed the street. The stock's been whacked for about 24% in the last month, but they took some huge step forwards in the quarter, and Wall Street, with its typical fascination with the quarterly earnings, that was all they cared about, so they trimmed the stock. But, they removed and refinanced a very restrictive credit package and replaced it with some structured notes. So they no longer have to take 100% of their cash flow and pay it towards debt reduction. They can now buy new ships. They can look to grow. They can pay a dividend. They've got a ton of cash flow that they can do things with now to build the actual value of the company. This thing's trading at about 50% of book value. So, below what I think the company can be liquidated for at this level. They've got a 99% fleet utilization on all 17 of their vessels. They just extended their largest contract out to 2019 at a higher rate that produces an additional $54 million of cash flow per year. So I see a lot to like in there. I'm very thankful everybody was focused on short-term earnings. That's another stock. I think you're probably looking 3, 4, 5 times your money as the economy improves over the next 5 years.
This chart is interesting here, too. You've had this $4 area, gave you a little bit of trouble, but then we just had a tight little day on Friday, closed and held over 4. If we could start getting over 405, 406, we could start breaking out here, too. I don't mind this chart. Out of all the ugly charts that we've been looking at on the show here today, this one actually does look pretty decent there, Tim.
Yeah, it's, I'm bullish on the shipping business, have been for quite a while. The dynamics of the shipping business are slowly but surely changing. It's kind of been the wild, wild west of industry for years. Lots of single family ship owners and guys really shooting from the hip and taking on too much leverage. But at the end of 2011, 2012, all of a sudden people like Ross showed up. Ross has a huge position in shipping, dry bulk and tankers both. KKR started coming in and they're buying ships and ship loans and they're looking to buy shipping companies. Same with Apollo Global. The private equity money started just kind of tiptoeing into this thing. And everywhere you look, these things are trading 30, 40% of tangible book value. We've got some that are doubles already in, about a year, or ISH, which is my favorite U.S. ship. ISH, International Ship Holding. They have global carriers. They have Jones Act, fleet, which means they can ship from port to port within the United States, which I think is pretty valuable. We bought it in the high teens a year ago. It's still cheap here at 26. It's trading at a huge discount to book value and pays a very nice 3% plus dividend. So I'm really bullish on shipping. Global Ship Leasing, I think, has a nice fleet. Their contracts are solid. Now that this very restrictive financial package is gone, I think management's got some choices that they can make to get the stock price a lot higher over time. We've owned it for a while. We're down in it, but we bought more because I think right now, in a rational liquidation, you could liquidate this company at a profit.
And so these things, they're on your radar, and then when you hear some of the bigger investors in it, it just kind of piques your interest a little bit more. Or do you get your keys from the Wilbur Ross and then you start doing your homework?
Yeah, I follow the private equity guys. I would hire private detectives to follow these guys around if I had the money. Because when you see them starting to show up in an industry that's been out of favor, you're within a few months of a bottom. These guys don't come out to buy a falling knife. They're buying the knives that are lying scattered all over the ground with the intent of holding them. I think the average holding period for a private equity deal right now is about 5.5 years. And that's really consistent with my time frame. So if I see all these guys all of a sudden in shipping as they were last year, and right now they're all in energy, then I'm waking up and going, I got to look for values there because the really smart, patient money is out and hunting, and I got to get in alongside them.
Tim, what about the big one, dry ships there? This is one that's been in the doghouse here for the better part of, I don't know, I'm going back to the monthlies, better part of 5 years, really. Yeah. It started to show a little bit of life there about 4 or 5 months, just at the end of 2013, and then it's just back in the doghouse here again. What do you think of this one?
I don't like their balance sheet and fundamental factors. They do not pass my credit tests at all.
Too much debt? Is that the problem there? Is that
too much debt? Not enough cash flow. Nothing's improving. Every category that you look at is getting a little better or a little worse. They're not moving forward.
Okay.
All right, been some bad news in the banking sector. Started kicking it off with Bank of America and now J.P. Morgan. Were you the one that I know we had someone talking about Regions Financial? Was that one of the issues you were following? Because they got some love and barons over the weekend.
We own Regions, but from 2009, so I doubt that I've mentioned it recently.
Okay.
Long term. That's a long-term investment.
Guys, we're just not a trader over here. We hold stuff until it works, and until it trades at a premium valuation and is over our target price. So, the big banks are getting a lot of press, most of it bad, but then as the little banks' earnings have been coming in, and last 2 weeks we had an awful lot of them, you're seeing just steady improvement. The credit picture's getting a lot better. Just has continued for several quarters in a row now. Loan demand's not increasing very much, but it's getting a little bit better across the board. Book values are growing, capital levels are growing. So all this bad stuff's happening up at the top, but these little banks are slowly but surely getting better, and we're going to see this consolidation trend continue and accelerate in the little banks. And somebody asked me the other day, they were like, it was one of the marketing people from Benzinga. They're like, all right, tell us why somebody would not take your Banking on Profits newsletter and invest in these little stocks. And I said, well, because they're foolish and don't like money. That's the only reason I can think of, because this, for your long-term money, is probably the single best thing you can do. It's going to be a very boring way to make an ungodly amount of money over the next 10 years, and they're still cheap.
Okay. All right, we had Doug Cass on last week, and I know that you popped in the chat room, and he laid out a bearish thesis for the market, and I just wanted to get your take on what he was saying, what he was following. You've been talking for a while about a hard time finding value, and you do your homework to find value. But what do you think? What do you think about his bearish thesis?
Well, I think he's got a pretty good shot of being right here. I mean, if you look at the big picture stuff that I like to talk about, the Schiller PE, the market cap to GDP, the value line median appreciation potential index, all of these things are saying, hey, the market's back near 2007 levels when you look at the big picture. That's a little scary. Now, Doug has a shorter time frame than I do, but most of the time, I think he's right. We're ripe for something to happen in this market and push it lower. We've been up for 5 years. We're better than double the market bottoms of 2009. So it, it makes sense that we're kind of due. The economy, as Sam Zell put it, does not reflect, the stock market rather does not reflect economic reality. We've got just an okay economy and a superheated stock market. So I would not be surprised if Doug is right.
So these positions that you have, even if the market goes into a total meltdown, I mean, we discussed this before. You have your stops and stuff, but you're basing this on value, and if you do get like a 400 or 500 point down day in the market, it really doesn't change your overall thesis. It's just if it hits your stop price, you're out.
Yeah, we don't use stops. I don't. I do not use stop orders at all. Everything's based on if the fundamental score of that company changes, I'll sell. Okay, but
Okay.
if it's just getting cheaper and the fundamentals are staying the same,
You might
well,
even buy more.
I'll probably most certainly buy more. Um, so yeah, I don't use price stops in a long-term approach like mine. You've just got to ride it out. Stops are going to destroy your returns.
You're a pure fundamental balance sheet, analyze the financials type of investor, right, Tim?
Yeah, I'm just not smart enough to do this advanced statistical and charting stuff. So, but balance sheets, I've got those pretty good. So I just stick with those and ride that, and the market does what it does.
I mean, a lot of people made a lot of money just playing, and for over the course of the stock market. That's how it's been done for hundreds of years. And really, when you break it down, the financials is really what moves and what's going to drive prices in the long term. So even though you can say high frequency trade and all this short term stuff moves prices around, in the long term, the company's price should still reflect overall valuations. And if you're analyzing from that perspective, you're kind of cutting out the noise, right?
Yeah, it's like Ben Graham said. In the short run, the market is very much a popularity contest. In the long run, it's a weighing machine, and
Yeah.
eventually the value should be reflected. I've been doing this for longer than I want to admit because I pretend not to be that old. Um, but it's always worked, and you've just got to adapt that longer cycle. I mean, even if you're a trader, when I was a broker, I had a whole bunch of clients that were CBOE and CBOT guys. They traded day to day in millisecond frameworks, but they gave me their money to manage for the longer term. So even if you're making a ton of money trading, you should have long-term money in the stock market.
Okay,
And I try to do the same thing there, Tim. And it's hard as a trader because I'm a guy who trades a ridiculous amount of stock, and I have been for years. But I have a separate account where I try not to look at it. I mean, I don't even log into it sometimes for weeks because I know if I log into it, the trader in me will want to trade out of some of these positions that I'm in. So I try not to look at any of that stuff. And it's a hard thing to separate trading and investing, but it is two completely different animals.
Absolutely. And here's how to solve that problem, by the way, Dennis.
Okay.
Use my small banks, okay? Because you can't trade those things.
They're too
Yeah, yeah,
illiquid.
yeah.
There's no bids and offers.
And it's going to take you a day or two to buy a position, day or two to sell a position. There's no trading that stuff around. But
That's a good point. Okay, we've had Tim Melvin on the Deep Value Letter. Tim has spent decades identifying undervalued stocks in the market and is having to work overtime here to find some value, but he does that for us today on Benzinga's Pre-Market Prep Show. Tim, thanks a lot, and I'll be to Preakness is going to be a tough race, huh? Because Chrome's going to go off the favorite. Probably is not going to be a big a field, so they're not going to get a juicy exactas. But we'll check in with you and see what you got on the radar for that. Thanks for being on today, and we'll talk to you soon.
guys, it's always a pleasure. Let's talk soon.
Okay.
Thanks, Tim.
Bye-bye.
Joel, we're sitting down here, 8 points here right now. We do have some major imbalances here, and they're mixed, believe it or not. Now, obviously, we know that it's early here yet. We're still 40 minutes before the market open, but early indications, I'll give you a few. Coca-Cola has 182,000 to sell. That was Carl Icahn. Wasn't he in Barron's there and fighting with Buffett on Coke or something
Yeah,
with the executive compensation?
yep. He was going at him a little bit. So, War of the Titans there at Coca-Cola.
They were battling it out. I'm actually, full disclosure, I do have a trading position on. I am short Coke. I shorted at the close on Friday. Took it home overnight there because I knew 41 was solid. I've actually just been trying to sneak out here in the 70s here while I've been on the show. Still got a little position on short Coke. Also, we've got here JP Morgan, obviously with big sell and balance, which we would expect because the stock trading down here $1.50 in the pre-market. It's got 156,000 to sell. But here's an interesting one. General Electric, 198,000 to buy. So I don't know if that's going to flip or if that's going to stay the same. Right now, it's trading down 8 cents. Obviously, if that does remain, that means the stock's going to open higher. So I
Wow.
would expect that probably gets offset. But that's a big buy imbalance for GE, and especially on a day we're down 7.5 points.
And look at the ranges in this thing. Wow, just been trading between 26.53 and 26.90. Dennis, the entire week we traded within a 30-40 cent range. Unbelievable. Must be a big seller kicking around at 27. I think I'd be,
There is.
yeah, maybe you get a pop here. I don't think you're going to get a pop anywhere near those highs in the at 26.83 or 26.87, but you may get a shot at the close there, 26.77. Or excuse me, the close from Thursday was 26.77. So if you could get this thing up a dime, maybe a good short. Now, if we take out the bottom of this trading range that we've been in at 26.53, I see GE going down in the lower 26s. Had a low at 26.23 on April 24th.
Also, here, interesting one is Pfizer has 131,000 to buy. I would expect that's going to get offset and flip because the stock's been trading actively off its earnings report down 40 cents. But interesting, Merck, which is obviously a sympathy play here, has 67,000 to buy. And Merck had a real bad day on Friday. And I love these setups here where you get a stock that had a bad day on Friday, you come in on Monday and it's got a big buy imbalance, and that could be a potential pop to fade there. Still going with my whole pops to fade theme. So I'm looking at Merck here as if this thing opens up, actually, there may be a shot here where it gives you a nice little chance to try a little scalp on the short side.
Okay, I believe Josh is hopping in here with XOOM here. Zoom Corporation. Tight ranges for this issue over
Hmm.
the last couple days. Dennis, I don't know. It's not a heavily traded issue, but you could have some size kicking around at the $23 level. I look at the highs from the last two sessions at 22.88 and 22.92 here, but nearly getting to that $23 level. Man, above that, it doesn't even look like you got a whole lot of room. You got 23 and a quarter being high on the 25th. Coming back on the downside, we're trading flat here. Trying to protect profits in this 22.29 was the low on Friday. I'd have to get a little bit cautious if it took that out. I don't see any support until you get to Thursday's low at 21.83. You're right, not a big volume mover. So really, to keep this thing really going on the upward move, I'm not sure why it gapped up like it did.
Earnings.
Earnings was the play here. Sure, like to
Yeah.
see it. I mean, longer term, you could say 24.11 level, but shorter term here, like to see it get back above 23, close above 23.
Yeah, we had the gap up. It was from earnings on the 22nd. Obviously, we had the gap up on the 23rd because the earnings came out the night of the 22nd. They had a surprise profit. They were supposed to lose 4 cents. They made a penny. Woo woo! Everybody jumped in, obviously, and stock popped $4. Got up to 24. Resistance was very well defined. If you went back to March, we had three highs right around above 24 as well. That's where the stock topped out, and then it pulled back, kind of like a almost like a 50% retracement of the original gap up, and it's consolidated there for a few days, and it's trying to drift higher. So I'm not hating this chart. I'm not loving it. I'm kind of sitting on my hands. Lower right around 22. There's pretty decent support up here. 22.65. You're reaching a little bit there. So
Okay,
um,
little general.
couple.
Any more imbalances to talk
Yeah,
about?
just quickly because we're running out of time. AT&T and Verizon both with buy imbalances here and both sizable. AT&T 125,000 to buy, Verizon 174,000 to buy. Again, both stocks are trading down pre-market, so obviously one of two things have to happen. The stocks are obviously going to go up in the pre-market here eventually, or those imbalances are going to flip. And because I'm just seeing a lot of these imbalances, I'm not totally trusting yet. I'm thinking that it could be they could flip here. So.
Okay, haven't had the S&Ps traded down 8 points off the open in a long time, Dennis. Here, with the S&Ps down 8, opening into a major support level, the lows that you had from the beginning of early last week. Is it just another chance here to scoop some stuff cheap up off the open and ride it back up to the close, or do you see some continued downside going through this 1865 level?
Depends on your time frame here. And like I've been saying, I'm very nervous for this market overall. I think we are trying to make tops. I would love, like I said, to get up there and fake out everybody and get over 1900. I just don't know if that's going to happen here. But from an investing standpoint, a longer term standpoint, I think Dougie Cass might be right that this market is trying to top. From a short term perspective, the buy the dippers still have control every time we pull back. The buy the dippers come in. So it wouldn't surprise me in the least if the buy the dippers come in here again and try to buy this up. But the sell the rips guys and the sell, pops to fade guys are starting to come into this market too. So now you got a battle between the buy the dippers and the pops to fade guys. And I think that's just it. I think, would I be selling the market down 8 points here? No, because every time you've done that here in the last 2 years, you've been punished for it. I liked it more pops to fade. So I'd be more stock picking here and looking at, what's trading higher here. And is there any sectors that were potentially weak on Friday that, are getting a little bit of a lift where I might be able to get off a decent short. So I don't want to short weakness. I want to short strength.
Okay, all right. Well, there's your trading plan that Dennis has lined out for today. We're going to take a quick break and bring on Andrew Keene from KeeneOnTheMarket.com. Welcome back, traders and investors. We have a very special guest on today, Andrew Keene from Keene on the Market. Andrew, how you doing today?
The market's down a little bit, but my the way I trade is very stock specific. I have a stock that's up over $90 this morning that I'm long calls in, so that's good to start the morning with. Another stock that got upgraded this morning. But in
What
general,
stock?
I've been
What
long in
stock's
the
that?
market.
What stock's that?
VEAV got upgraded from aerospace stock. We've seen, I trade a little bit differently than most people. I watch institutional order flow, which is orders from the hedge funds, pension funds, and we saw a big institutional buyer of BEAV May 90 calls last week. The stock was trading around $88 at the time, and now the stock is coincidentally trading up to $98. So, does someone know something somewhere? Possible. But when I trade it, it's all in public information because I'm just mimicking their paper. So that's a good start for the morning.
Okay, so do you have I mean, you bought some calls. Did you go into money? Did you put a call spread on? How did you approach it?
Yeah, I mean, it just depends on what they are. A lot of times I just mimic the same order as them. So I actually saw the May 90 calls being bought last week, and they paid 90 cents for these. So I bought these at 90 cents. Let me see what date I bought these on. I bought these on last Wednesday for 90 cents. They bought over 3,000 of these for 70 cents. Now they're going to be worth over $8. So they were out of the money at the time. I pieced out of it. I only bought a 20 lot of them. I was risking about $2,000 on the trade, and I already pieced out. I hit 3 targets, and they are aggressively buying them again on Friday for $1.40. So maybe there's pending news, maybe some news. And then I'll piece out of my position today. So I'll take off the whole position today.
Do you sell any stock against it, or you just exit the outright options? Because sometimes you can maybe short the stock, offset the position, and maybe trade it a little bit intraday. Or this one, you're just going to try and ring the cash register.
Yeah, I mean, that's a great point. The one thing about stocks versus options, the option market doesn't open until 8:30 today. So if I wanted to take my profits right now, I'm watching the stock trade right now. It's 98.25 and 98.50. So I could just sell the stock against my calls. I have five options left. I had 20 of them. So that gives me the right but not obligation to own 500 shares of stock. So in theory, I could sell 500 shares of stock against my position. I will just hold them to the opening. Doesn't look like the stock's selling off. When I woke up this morning, it was trading like 95, and now it's trading 98.5. So that's a great point, and that's one of the things that I can do in stock. The stock opens, I think, 5:30 a.m. Central Standard Time, and it closes at 7 p.m. So you don't get these instances where you see a stock gapping a lot unless it's an earnings thing very often. But, that's a great point. I could, if I wanted to, since I have such a small position on, I'll just hold it and just sell them on the open.
And do you use the pre-market parameters at all for guidelines in the stock? I kind of, just for example, Twitter last week really got beat up in the after hours session. Do you we use that as a parameter? Let's say it goes gets back up to that 98. Let's see what the high's been, 98.69. Do you use that as a parameter, or do you look for size orders? I mean, this thing doesn't trade a whole lot. So what do you use? Do you use the pre-market levels? Or are you trying to identify size sellers?
Yeah, I mean, it just kind of depends on the stock. Like this one is pretty thinly traded.
Mm-hmm.
Something like Twitter. I had a Twitter position on. I was short Twitter. I had a put butterfly on for earnings, and it actually sold off to the level I wanted to. It got under $37, and then it reversed. So I haven't seen how much BEAV. I only think it's traded about 600,000 shares today, and it only trades about 800,000 in a day. So today's going to be a very, very heavy volume day in BEAV. It's traded almost how much it trades in a day. But, pre-market is very thinly traded. Like if I look at it right now, it's 500 shares by 100, and it's 32 cents wide. So I do use the pre-market to try to gauge. I do day trade Facebook, Tesla, Twitter, Apple, and I use the pre-market for that as well. So, when it's stock-based news like this, you can definitely use the pre-market highs or lows, try to capture that.
Yeah, and Brent just put in there that they're going to explore strategic alternatives. And you had that person you said that they made that move on what day last week? Last Wednesday?
I just brought it up right now. A trader bought 3,206 BEAV May 90 calls for 70 cents last Wednesday, and the stock was 87.66. So, it's just kind of a coincidence against this guy's he risked about $200,000, and he's going to profit about, we never know a trader's stock position on, so I try to, calls are bought for one or two reasons. We talked about this last time in the show. Calls are bought either speculation of upside or a hedge against a short stock position. So I try to find a one better speculative. So this guy, he's risking about $200,000, and his trade's going to profit about $2 million.
Wow, what a trade. So I know you're looking for unusual option activity that keyed you off to your position in BEAV. So it's much harder to do it in the broader market here. But what are you seeing? I mean, just, what's your overall feeling? We got the pop off the number on Friday. We didn't get the follow through. Now we're trading at some, I call it very critical support. I was trying to stay bullish above this 1865 level. You had a couple lows there. Now you're taking it out in the pre-market. Now Dennis is looking for a little pop to sell into strength here. Is the market going to give you a chance?
If you think about it, there's two kinds of markets. There's trading range markets and a trending market, and we're almost in a trading range market where we can't really get, we had that nice jobs number, or what we thought was a nice jobs number. We used to think that bad economic data was good because that means the government's going to pump our money in here. Now good economic data is actually bad. So we've been between, 1810 and 1890 in the futures, all the way almost since February. So that's a pretty tight trading range. But we are still in a raging bull market. There's three ways to play a raging bull market: aggressively long, moderately long, and flat. There's no short setups, I don't think, here. I can't get short the market until we break under 1,800 in the S&P 500 futures. So we are still in the bull market. We talk about the Ichimoku cloud. It's been under the Ichimoku cloud, which is my favorite number one technical indicator, for 12 days in the last year and a half. So, we are still in a bull market. But, if you don't like the bull market, I think there's not many setups to set up short. If I was to play to the short side, I would take all these stocks that are making higher highs and higher lows, pick one: LinkedIn, Pandora, unfortunately Google, Facebook. All these stocks with the high growth, there's been a rotation out of these stocks, right? People used to always shift to growth, and they would love these growth names. And no matter what Amazon's PE was, you'd always find buyers. Well, now it's the complete opposite. All the hedge funds want Exxon, they want Chevron, they want COP, and they don't want these high growth names. So if I was to choose to get short something, I would take advantage of the fact that these stocks look technically very weak.
Okay, all right, Todd. So Twitter, you had a butter. Could you explain the trade that you had going into earnings, and what you based it on, and what the actual trade was, and how it worked out for you?
Yeah, basically, I go through a trading plan, and I call it the Him Cribbit trading plan. So basically, I look at something like Twitter, and the first thing I look at is historical movement. Unfortunately, Twitter's only had one quarter of earnings, and it sold off on earnings. Then I looked at the implied movement. The implied movement was about $6, and Twitter was trading around 43.50. So once I have the implied movement of $6, I have two quote unquote measured move targets. The option market was implying that Twitter would move $6, either up to 49.50 or down to 37.50 between now and the end of the week, right before earnings. So then I just put on a basic risk versus reward setup, knowing that the Twitter sold off last time. I thought Facebook's number was great, and it sold off, and the chart looked weak. So what I did in Twitter is I bought a put butterfly.
Okay.
So basically what I did, I bought the 40 puts, I sold 2 of the 37 puts, and then I bought these 34 puts. You can say it's a put butterfly. You can say I bought a bear put spread to sell a bull put spread. And the reason I sold that 37, 34 put spread is that's right where the measure move target was, and got some of my capital back because buying a put spread was just a little bit too much I wanted to risk.
Yep.
So on the trade setup, basically, I was risking $45 to potentially make $255. And I sold it out on Friday because it's just a weekly position for $1.15. So I basically tripled my money in the course of 3 trading days. So it worked out pretty well. It would have been much better at 37, but a winner is a winner. And now I don't have anything on Twitter. I will look to trade Twitter today as a day trade, but I do not have a position on right now.
Okay, and you'll for a day trade, do you like to go in with something right off the open, or do you let it shake out for the first few minutes and then maybe use a breakout from the opening range? I mean, we do have it trading down here in the pre-market. I don't know. Are you a Barron's fan at all? Do you read Barron's, or is it like getting the news after it already happened?
Yeah, it's kind of like getting the news after it happened. I respect their writers and the articles they put out, and it usually affects the stocks that they talk about. Right now, as I look at Twitter, I look at the 5-minute bar using the Ichimoku cloud, and I use the pre-market. And what I see here is it's under the cloud here. I want to see it get into the cloud and break up or down. I'm a breakout trader. Everybody trades differently, and there's no right or wrong way to trade. The right way to trade is someone that makes money. So I am a breakout trader. Some people are pullback traders, aggressive pullback, mild pullback. There's so many different ways to trade, and you can't tell someone right or wrong how to trade if they can consistently make money. But I know I'm a breakout trader. So if I see Twitter get into this zone, it looks like between 38.60 and 38.90. If it sells off, I'll look to get short it. If it breaks 38.90 to the upside, then I'll look to get long it. But I don't have anything on yet, just in Twitter.
Okay, and a lot of people are probably sitting on some nice profits here in Apple. Had the good earnings, had the follow through here, trying to knock on the door on 600. I know this is probably not a great day trading stock for you because it's a higher price, maybe after the split. You got any take on Apple?
I actually got shorted in earnings, so I didn't have a big position on it. I was risking like $800 on the trade. Apple is one thing I looked at, and I looked at the historical movement, and it sold off actually 6 of 8 quarters. I guess they like the news with the higher buyback and the stock split, so the stock popped. I've been saying Apple should split for like 3 years because this is what happened in Baidu, where Baidu split the stock, and then the stock doubled in the course of last year. I think this is what going to happen with Google, and it should happen with Apple. It doesn't change the market valuation of a company, but psychology tells you, oh, now I can buy Apple. It's cheap. It's only going to be $70. Or the same thing in Google. You get the retail investor coming in and saying, wow, the stock for $6,000 and watch 10 shares of stock. That's not exciting. But now you can own 100 shares of stock, or what? 7-to-1 split it.
Okay. All right, Andrew. LinkedIn had some, we thought was decent earnings, got an upgrade, got a pop, and then it had the drop here. Is this something that you're active in at all?
I had a LinkedIn position on. Unfortunately, that one didn't work out either. I was long that one. I thought the earnings were pretty good. Butterfly as well. I think Tesla can get up to 225. LinkedIn now is nothing. There's two ways to trade LinkedIn. It's either short or flat. So I am flat right now. LinkedIn's one of these stories where it's making lower lows, lower highs. The chart was very weak. There's no long positions to take.
Okay, and just your final thoughts here on the market. S&P's trading down pretty good in the pre-market, down at 9 points, still hanging at a support level here. So your bullish thesis is probably still intact here. You may be shorting some individual equities, but as far as today goes, you're not looking for a washout. Is there something that could change your mind or change your strategy on that today? Do you have a particular level in the S&Ps, or in the futures, or in the cash, or something before that 1800 level that might get you a little bit more excited about the downside?
Not really. Like I said, I do trade a little bit differently than most people. I trade, institutional order flow, and I trade stock specific. So there's 8,700 stock specific, and today, I already have 2 stocks that are gapping higher, so that's going to work out well. But in the general market, flat or long, I don't think there's any short setups here. If you wanted to aggressively be shorted here with a stop above 1900 and S&P, that might work. In the last 18 Tuesdays, so keep an eye on that as well.
Okay, we've had Andrew Keene from Keene on the Market that looks for his cues in trading from institutional order flow. It's worked out good for him today in Beaver Aerospace, so check out his site. Andrew, thanks for coming on. Have a great day. We hope to speak to you soon.
All right, thanks a lot. Have a great day.
Okay, Andrew Keene from Keene on the Market. We haven't heard from Mighty Joe Young yet. Mighty Joe, are you kicking around out there?
Well, I'm right here, Joel. How are you this morning?
I'm doing good. Can you hit our listeners up here with some headlines?
I sure can. Target announced Monday that Chairman, President, and CEO Greg Steinhoffel is out nearly 5 months after the retailer disclosed the breach, which has hurt its reputation among customers and has derailed its business. The nation's third largest retailer said that the CEO, Steinhoffel, a 35-year veteran of the company and CEO since 2008, has agreed to step down effective immediately. He has also resigned from the board of directors. A company spokesman declined to give specifics on when the decision was reached. Activity in China's manufacturing sector contracted for a 4th consecutive month in April, a private survey showed on Monday, adding to questions about whether the world's second-largest economy is still losing momentum. The HSBC market PMI has been below the 50 level that separates growth from contraction since the start of 2014. Output and new orders contracted in April, and new export orders slipped back into contraction after recovery than the previous month, the survey found. Checking into locations isn't just as popular as it once was. In an effort to stay relevant, geolocation app Foursquare has big changes planned. Foursquare announced that it will split the Foursquare app into 2 apps. The newly rebranded app will lose its check-in features and instead will compete with review sites like Yelp, focusing solely on local recommendations. The second app, a new one called Swarm, will gain Foursquare's check-in capability and show users which of their friends are nearby. The split stemmed from conversations with users, during which Foursquare found that most rely on the app for 2 reasons: to discover new places and to meet up with friends. Apple is building a team of senior medical technology executives, raising hackles in the biotechnology community and offering a hint of what the iPhone maker may be planning for its widely expected iWatch and other wearable technology. Over the past year, Apple has snapped up at least half a dozen prominent experts in biomedicine, according to LinkedIn profile changes. One prominent researcher moved 2 weeks ago, and Apple is recruiting other medical professionals and hardware experts, although the number of hires is not clear, said two people familiar with the hiring who declined to be named. Much of the hiring is in sensor technology, an area that CEO Tim Cook singled out last year as primed to explode. Industry insiders say the moves telegraph a vision of monitoring everything from blood sugar levels to nutrition beyond the fitness-oriented devices now on the market. And Detroit's annual Cinco de Mayo parade that can draw as many as 40,000 people has been marred by violence in the past, leaving organizers over the years to ponder moving it and canceling events. Sunday's fatal shooting that shut down the parade a little more than an hour into the route is forcing organizers of leaving the popular festival's future in jeopardy. Belda Garza, vice president of the Mexican Patriotic Committee, said these kinds of things are a tragedy for the entire community, and not only for the young man who got killed, but also for the shooter. The latest bout of violence may lead to changes, she said. Detroit police said an argument broke out and the suspected shooter, a 24-year-old man, initially attempted to step in and defend a relative or friend involved in a disagreement and wound up firing a shot, striking the teen. The shooter, who is in custody, fired one round and the weapon was recovered, police said. Former President George H.W. Bush was honored on Sunday with a Kennedy Courage Award for agreeing to raise taxes to confront a spiraling deficit, jeopardizing his presidency that ended after just one term. The John F. Kennedy Presidential Library and Museum in Boston honored Bush with the 2014 JFK Profile and Courage Award. The award crossed generations and political parties. Conservatives denounced Bush for raising taxes, breaking a key promise in his successful 1988 campaign for the White House. Schlossberg said the award recognizes Bush for taking action, even if it was unpopular. We celebrate courage today in a moment of profound change and challenge in a world gripped by partisan gridlock and inaction, said Jack Schlossberg, son of the late Democratic president's daughter, Caroline Kennedy. John Heilman and Mark Halperin, political journalists known for their detailed, gossip-filled books on the past two presidential campaigns, will join Bloomberg in the coming days to start a new site that will focus on American politics and policy. The new project, Bloomberg Politics, is part of a broader strategy put in place by Justin B. Smith, who was appointed chief executive of Bloomberg Media Group last summer after serving as president of Atlantic Media. They will anchor a daily television program that will also stream online, as well as write news articles and take part in live events. A start date for the site has yet to be set, but is likely to be months away. And The Amazing Spider-Man 2 debuted with $92 million in North American theaters over the weekend, according to studio estimates on Sunday. It was a solid opening for Sony's Columbia Pictures, which has released 5 movies about Marvel's web-slinging superhero in the last 14 years. The release of The Amazing Spider-Man 2 essentially kicks off Hollywood's summer season and its annual parade of sequels and spectacle. Marvel movies have regularly commenced summer moviegoing in recent years, and the Spider-Man 2 opening begins the season with a business-as-usual blockbuster performance. Last week's #1 film, the female revenge comedy The Other Woman, slid into a distant second with $14 million in its second weekend. The rebooted Spider-Man franchise, starring Andrew Garfield, isn't performing quite as strongly as Sam Raimi's trilogy, with the Tobey Maguire. However, the eagerly awaited comic book adaptation of Spider-Man was released on Friday, May 3rd, 2002, and quickly became the fastest movie ever to earn more than $100 million at the box office, raking in a staggering $114.8 million by Sunday, May 5th. That wraps it up for me. Just a reminder, ladies and gentlemen, the show would not be possible without our dear friends at Options House. It'll give you 150 commission-free trades just for signing up for an account through this page. There's buttons at the top, at the bottom right. Go ahead, click on through, open an Options House account, get 150 commission-free trades just because you listen to Benzinga's Pre-Market Prep. And with that, I think Brent is over here with some rating changes before the bell.
Joe, how was your weekend?
It was pretty good. How was yours?
It was pretty excellent.
Have you guys heard Joel's loose crown clanking around in his mouth this morning?
Uh-uh.
Nah, he's in agony. I shouldn't make fun of him.
Thanks, Joe. Thanks.
King Joel's crown is loose. No, just kidding.
Yeah, I got in a fight over the weekend, and you should see the other guy. No, I'm doing okay, though. Thanks for the concern, Joe.
So let's talk about some ratings this morning. How about that, ladies and gentlemen? A couple of the top upgrades and top downgrades, and just for a little bonus, I'm going to throw in some top new coverage this morning.
Okay, thanks.
Oh, Joel seems excited about that one. Okay, so Deutsche Bank this morning upgrading shares of Salesforce CRM. They upgraded stock from hold to buy.
Okay, hold to buy in Salesforce here, getting a bump up coming off the recent lows of the move here. First, let's check to see what's going on in the pre-market. Getting a little bit of action here, not a lot. So let's go to the daily charts, and the daily charts are telling us that you did have some resistance here at 53.68. That was your high from last week. But before it challenges that level, it's going to have to take out 53.04, which is a high on Friday. I like the support in this. It's a lot easier to take a look at 51.62, 51.79, where your lows from Thursday and Friday. So play it to the upside till it takes out that level, because you could get a $2 drop. If you're looking for a major rally today here, you're going to have to also get through the 54.37 level. That was a high on April 25th.
All right, so we have shares of Chipotle trading up about $5 right now, trading right around 507. Charlie Mike Golf upgraded at Raymond James from market perform to outperform this morning.
Chipotle Mexican Grill, boy, that earnings day that it had was just ugly, and cut through the 520 level, then the 500 level. Trying to make it 4 days in a row of a rally. 507.93 is what you've hit in the pre-market, but not much volume. Less than 2,000 shares have traded in CMG. Taking a look here at the daily charts. Couple highs here. We did take it out in the pre-market, but I'd like to see what happens at 505 here. 504.36 and 504.98 were your highs from the end of last week. So it's going to have to deal with that level. And then also after the big drop, you had some lows between 511 and 514. So couple potential resistance points, but boy, you probably got a lot of people caught long this thing, from the good earnings. And boy, I remember that day. That was an ugly day.
Yep, I think it closed down about 5 or 6% on that day. So yeah, tough one. Wait, maybe I'm thinking of a different day. I think it was about 6% actually. We do have some pretty good upgrades, downgrades this morning, folks. So stick with us. We have about 4 minutes before the opening bell. Just wanted to highlight that really quick. It looks like we did bounce a little bit at 1864. We hit a pre-market low at 1863.75 on the S&P 500 futures, and we're trading around 1865.5 right now. One more, actually two more on the upgrade side of things. Bernstein upgrading shares of Oracle to outperform this morning.
Okay, Oracle, nice formation here in this stock. If you're looking to be a breakout or a breakdown trader, Andrew Keene happens to be the breakout trader. You are getting a little bit of a lift here, but let's keep an eye on 41.19 and 41.21. Call it 41.20. Those were your highs from Thursday and Friday. I wouldn't call it matching lows, but 40.64, 48.81 lows from Thursday and Friday. That should be pretty good support here. If you can't get through that 41.21 level, or 41.21, do have a little bit of air up to 41.63, adding a further significance to that. Those last couple highs there at 41.19 and 21. You also had a high on April 3rd at 41.14. So let's see if the upgrade can take you through resistance.
Alrighty, also had an upgrade on shares of Disney this morning. Topeka Capital upgrading Disney from hold to buy.
Hold to buy in the House of Mouse here. Let's see how Disney is trading a little bit up here in the pre-market. We had a close on Friday at 80.31, bumping up against some nice resistance here at the 80.55 level. Really can get follow through the high. You're trading there right now, 80.60. Had a high near 81 in the pre-market. 81 even was the high in the pre-market. You also had another high at 80.92 on April 10th. So perhaps just look for some size there at the $81 level.
All right, moving over to a couple of downgrades. UBS downgrading Southern Company from neutral to sell. We talked about this one a little bit earlier. I think you guys checked it out in the pre-market. How is the open looking, Joel?
And which issue?
SO, Southern Company.
Oh yeah, boy, big move in this thing. Last week had good earnings. Look at that. I work to get from 41 to 46 and change, almost 47. All those days of work after earnings makes a double top and gives it all away.
Yep.
Let's see how it's trading in the pre-market here. Trading spotty trades here. 43.73 had a low at 43.50. Let's see if we can get out of this area. 43.56.
Yeah,
It was a low on April 7th.
this issue has been trading under 44 since it looks like the beginning of April. So, just as you said, all the gains gone in a flash, gone in a week. One more downgrade this morning. Oppenheimer downgrading shares of Cena, Sandy, India, November Alpha from outperform to market perform. This is a big China play, Joel.
Yeah. It's not as big. It's getting smaller.
Not
here.
as big anymore.
Yeah, let's take a look at SINA here. Boy, I sure wish they would have told me that at 75, but here we are at 46.74 here. Pretty substantially lower open. We are gapping through the low from Friday at 47.80, 48.15 close. Use that if you get a major rally, maybe not today, but over the next couple days, maybe 47.80 to 48 be good resistance. You did have a double bottom there on Thursday and Friday, so folks may be looking to get out at that area.
All right, and I did say we were going to talk about a couple of new coverages this morning. We did talk about King Digital. We got a little candy crushing in earlier. So we had, I'm going to have to pull up the table here really quickly. We had nine new buy ratings on King Digital this morning and just one new neutral rating. That was from Piper Jeffrey. We had, let's see, an analyst at Cowen setting a $31 price target, and then on the downside, well, it's not much downside, but on the lower end of things, a Stifel analyst started a price target at $22. How is King looking right now, Joel?
King's trading up here, over 50 cents, taking just about 50 cents. Pre-market high. This is one of those times where you can use the parameters from the pre-market. Pre-market high 18.20. High in the session so far today 18.15. If in fact it can clear that level. You had a high on 28th last Monday at 18.52. Coming back on the downside here, 17.92 has been the low so far in the session. If it did cut through that, I don't know if I'd want to be long it. Could sneak down to the low or the high and the close from Friday at 17.56.
So we had another quiet period expiring today. That was in La Quinta. Ticker is LQ Lima, Quebec. We had, gotta go over this. We had a little less bullishness on this one, but still analysts highly bullish on this one. We had 6 new buy ratings or equivalents there, and then 2 new neutral ratings. But the 2 new neutral ratings were from some top tier firms. JP Morgan starting coverage with a neutral rating and $19 price target, and then an analyst, Stephen Kent over at Goldman Sachs, starting coverage with a neutral rating and $18 price target.
This thing has been down since the IPO here.
Mm-hmm.
Yeah, so 17.85 traded on on its first day, and really hasn't seen that. Only had 2 close over 17, and now we're trading down here at 16.31. So kind of hard to give you a support level. This is the all-time low for LQI. Just take a look at the 16.69 and 70 level if you're looking to buy this thing on strength. You had 2 closes at the end of last week at those levels.
Quite the difference in sentiment there. We have King with almost just as many buys, and it trades up about 50 cents, 50, 60 cents at the open. LQ, just a couple less buys, and it trades down about 40 cents at the open.
Yeah, no, that's not a great looking chart from the IPO.
Dennis asked me a little bit earlier to maybe do a quick preview of some of the earnings that we're going to be seeing this week. Just a heads up for traders. These are strictly confirmed releases, so there probably be a few that I've missed in here. These ones probably haven't been confirmed by the companies yet, so I can't definitively say they're going to be reporting. Nothing too big today. Tomorrow, before the opening bell, we're going to have DirecTV. We're going to have Mosaic, Office Depot, Nu Skin, that is NUS. After the close tomorrow, we're going to have Activision Blizzard, Agrium, Electronic Arts, FireEye, First Solar, Groupon, Whole Foods, that is. Disney also tomorrow after the close. On Wednesday morning, we're going to get Mondelez. We are going to get Tim Hortons after the close on Wednesday. CF Industries, Kinross Gold, Sotheby's, Tesla, Transocean, Time Warner Telecom, Zillow. On Thursday before the opening bell, we're going to get Dean Foods, we're going to get Dish Network's Priceline, Sony, likely reporting on Thursday morning, and then Thursday after the close, we're going to get Nvidia, we're going to get CBS. We did just have a little bit of news on Sotheby's. Joel, not sure if you've seen this one cross the wire. Did you see this one?
No, I did not.
Okay, so Sotheby's came out saying that they have reached a deal with Dan Loeb's Third Point. Dan Loeb will be on the Sotheby's board. Also, a couple of Dan Loeb's buddies there, Reza and Wilson, will also be joining the Sotheby's board. And it looks like Third Point and Sotheby's did settle. There's going to be no suit there. There was one little disclaimer in that press release. Sotheby's has capped Third Point's ownership at 15%, so Dan Loeb will not be able to purchase over 15% of Sotheby's shares. How did Sotheby's open? I haven't got a chance to look at the chart yet, actually.
Quiet trading here so far in bid. You got a good symbol on that. BID. The news hasn't taken it up that much. It's actually trading down here. 42.97 open, 42.98 high. Open lower, it is move lower. Keeping an eye on support at 42.22. That was your low from Friday.
All right, Jake, are you ready, sir?
Yes, sir. As always.
Hey, sweet.
Well, first of all, I'd like to start off. Joel, you see what the futures did right there at the open?
It did not hold that support at all here. Yeah, that's not a good open. We've had a new low from the pre-market at 63.75. Really don't see anything in there, Jake. 1860. Yeah, it's a round number, but the lows from last week were down at 1844. I don't see how we're going to get there today, but in all honesty, Jake, I just don't have a good support level for you.
Yeah, I'm just looking at my Twitter feed right now, and as far as macro news goes, I mean, there's a few articles getting passed around about the unrest over the weekend, and I'm just wondering if it was more of traders continuing to react to that. And there was a couple major things that happened. One of which was a pro-Russian group broke into a prison and released 67 pro-Russian activists. And on the other side, the Ukrainians, Ukrainian military surrounded a building that the pro-Russian activists were occupying and then burned it down, killing 5 of them and injuring, I think, 300 or something like that. It was a brutal weekend. And then Russia came out saying that they will cut natural gas supplies in June if they don't receive their payment for May. I can't remember what the cutoff date was, but there's definitely some major action going on over there, and that's really what's dragging us down on today's session. But as far as individual stocks moving down, or moving at least in general, one of them is Bravo Echo Alpha Victor. It's BE Aerospace. They are up. They were closed. They're at 88.88 on Friday, and now they're at 98. This is not a stock I follow a whole lot, so I figured I'd throw it in there, as one of our more obscure names here this morning. The company did announce that it is going to explore strategic alternatives, which could be a sale of the company, or possibly go private. So they did retain Citigroup as its financial advisor. So interesting moves there from B&E Aerospace.
Yes, and if you were listening earlier in the show, we had Andrew Keene on from Keene on the Market, and Andrew makes some of his trading decisions based on an unusual auction activity. And believe it or not, I don't know who got the memo, but someone bought 3,090 calls in this thing on last Wednesday. Made a purchase. I think he was talking about they risked maybe a couple hundred grand on the trade, and then lo and behold, you get the news. Now Andrew had a little position in it, not as big. He was parceling out of it today, kind of like sell the news kind of action. We did make a high here at 98.67. That's a new all-time high. We are falling back. It's just news. Kind of have to agree with Andrew on that one. But getting a trade from unusual option activity.
Another one I was kind of watching this morning was Orbitz Worldwide, which is Oscar Whiskey. It was up as high as 842 this morning,
Oh,
and then it just gave basically all that up, hitting a low of 718 at the open. Now we're at 753. Company reported a quarterly loss of $5.9 million or 5 cents a share last year. At the same quarter last year, it did $1.34 a share in profit. So that was a pretty brutal report there. The revenue was say 210.3 million, beating expectations of 206.5 million. So nothing, a slight beat on the top line, but nothing great. And it looks like just traders are saying, hey, time to sell this one off. So.
wow, got up to 842 and then stopped on a dime. You haven't been up at this 842 level since, wow, long time ago. Yeah, it had an 854 high on March 19th, but someone changed their mind on this thing and we slammed it all the way down to $7.20. That's the 718 is the current low. Boy, if this move continues, you gotta wonder, think what's gonna happen here at 699 and 7 even. Those were the lows on the 28th, 29th, and 30th of April.
Now, how recently have you guys been looking at J.P. Morgan this morning?
We talked about it a little bit. The news came out on what a time to announce some news, Jake. How do you like that on a Friday?
Yeah, it was Friday after the close. That is actually the classic time for governments to release bad news. Actually, generally, if you're, let's say, you're the White House or whatever, and you have to announce that, there's I don't know, going to be a very unpopular tariff or something like that. What they do is they do it in a stream. They do it all right after the close on Friday, like right around 5 or 6 p.m. And the idea is that so that the Sunday papers and the major publications of the weekend can only pick up and yell at them about one piece of bad news. So that's why a lot of major companies or organizations or governments release really bad news Friday evenings because they know that they only can get laid into for one piece of bad news, so they can release three and basically sneak two under the radar, essentially. But yeah, that's essentially what J.P. Morgan's doing here. 4:09 p.m. is when we got the 10Q, so it wasn't a really late one. I wouldn't be surprised if this is one where they try to sneak in at like 7 p.m. right before the market closed for the weekend, but they did say they're expecting the Q2 sales for the market segment down 20% year over year. They also stated they have a notes exposure to Russia equaling roughly $4.7 billion. And then, obviously when you had the continued turmoil in Ukraine over the weekend, I think that just signaled to the market that they have increased exposure to that Ukrainian event, and that guidance is down. So you put those two together with a kind of a weak Friday session, and bam, we're down. We were below $54 for a bit. Now we're back above it slightly.
Keeping an eye on a pre-market low at 53.64. Hit that right before the issue opened. Got to open under 54, 53.88 to 53.70. So use that 53.64 to 53.70 level as support. You also traded at 53.70 on November 14th. So far, that level is holding up as support. If in fact that's taken out, could be trading in the lower 53s. You had a low on November 13th at 53.15.
Another one that's trading down this morning, and I think you were talking about it a little bit ago, was LinkedIn. It really spiked at the open, though. It fell throughout Friday's session after its earnings report following the close Thursday, and then actually, so after the close Thursday, the stock dropped on the earnings report, and then basically jumped up in the pre-market on Friday, getting a little bit of a recovery rally, and then sold off throughout the whole day. This morning, it kind of continued that move until it hit that low of 144.03, and then at the open, it just spiked. So now we're at 149. So nice little rally there. Joel, what do you think of LinkedIn with this most recent action taken into account?
Yeah, I think you just had some nervous sellers there in the pre-market. Took it down considerably. But you're right, Jake. Did not hit the pre-market low. So if you were using that as a potential buy point, you didn't get in. If you were using that as a step-out point, you're still in there. Boy, this is a tough one because it's just such a bad day on Friday. There's really no resistance. I mean, you could say 150. That's a psychological number. Keep an eye on that. On the downside, if you're trying to protect some profits, if you caught this early in the session, I think this thing might chop around 147.73. That was your close from Friday.
Yep, so we may be just getting a big short covering rally right now. I mean, if you look at it, anyone that was short throughout Friday or short going into that earnings report, maybe just wanting to take some profits, because if they had shorted going into that earnings report, they may have shorted right around, say, 160. When you're down to in the 140s, that's a nice little turnaround. So it's possible you're just getting a little bit of a rally from that. Another one showing the weakness this morning was Sun Edison, SUNE. Sandy Uniform November Echo, another one of the solar plays. It was really dipping in the pre-market this morning. Pretty thin volume, hit a low of 1950, and then very similar to LinkedIn, it really popped at the open. Looks like we got a little bit of a pop in the S&P futures too. So I'm wondering if they're kind of all running together there. So keeping an eye on that. There was a Barron's cover story that covered Sun Edison. Gonna see if I can find exactly.
Yeah,
what's going on there.
just doubting their growth plan. So that hit it in the pre-market trading. Traded much lower. 1950 was a pre-market low. During the regular session, though, opened above that level. You're rallying back. I keep an eye right here. 2023. That was your close on Friday. Your close at Thursday at 2032. So double close area posing some significant resistance in the session. If we take out that pre-market low here, 19 and a quarter was your low on Thursday. Well, S&Ps have popped up to the former support, now old resistance. So let's see if we can gain some footing here on the lows from Monday and Tuesday last week, and perhaps get a little bit of a run up to the low from Friday at 1872. That's our show for today. Happy Monday to ya. Have a good trading day. We'll be back with you tomorrow.